You're watching 9 News at 4.
Something that may be on the forefront of your mind is investments and retirement. Stocks continue to fall as the market reopened this morning after a long weekend and last week's sell-off. Now, Amanda, what does a market sell-off mean for investors at home?
Well, Liz, a market sell-off is essentially lots of individuals pulling their money out at one time. So it creates a very dramatic drop-off, and it's typical for a market to sway about 1% to 2% every day. But when we see large percentages drop off, well, that's what the professionals call a market sell-off. And I did speak to a local financial advisor who explains what this means for buyers at home.
Red across the board. That's how your portfolio may look right now, especially if you have a piece of a big name technology company.
The tech stocks have really led the recovery from March.
But now those tech stocks lead the decline.
They have seen gains from March that really don't back up what they've done from quarterly earnings reports.
Chris Burns from Burns Estate Planning and Wealth Advisors says those stocks were overvalued. He uses the recently split Tesla stock as an example.
Their current market value cap is so out of line with what they do from a revenue standpoint. But Tesla is one of those stocks that people have that fear of missing out.
That fear of missing out, tech stock boom and dramatic drop is just one culprit to the market sell-off. Burns also says another part of the blame goes to the federal government.
There hasn't been anything done up at Congress or the Senate to get another stimulus package to the individuals inside the United States.
Conversations about another relief bill linger on, and Burns says this plays a role on the markets. However, this sell-off isn't all bad news for buyers at home, especially if you're far from retirement.
So when they see market sell-offs, they should treat it as an opportunity for long-term investing.
For 20 to 30-year-olds, now is the time to go bargain hunting for discounted stocks and long-term investments. And if you're in the home stretch of retirement, Burns suggests you take a look at your account and have a plan.
And a plan is huge because a plan will help you remove emotion from investing.
He says find a financial advisor to look at your plan and help decide how much risk you should take.
Now, Burns says pay close attention to the news in a time like this. He says sometimes we're just one tweet away from moving markets left or right.